So since our last Markets in 5, there's been a lot of turmoil in the market. So the question is, are we out of the woods? That's what we're going to explore today. My name is Brian Cannon, and welcome to Markets in 5. Is the market out of the woods? I would say very simply, not yet. But again, every rally starts off the bottom. So, question is, where does that bottom and how much damage was done? If we look at the S&P 500 here, you can see that that we are now below the 200-day moving average. Now we've come down, found a short-term bottom so far, and seem to be heading back up toward it. So the real test will be, can the S&P 500 get back above its 200-day moving average? That'll be the first test to determine if we're out of the woods or not. The market is very much oversold right now, and meaning that it's due for a rally. But again, until there's been a lot of technical damage done. Until we get back above certain levels, you can't have a lot of confidence in this market that we are out of the woods quite yet. So this chart, actually I put out on our market blog. So if you go to our website to the stock market update, you can see that I update those periodically as well. And as I had mentioned last week, that the market is essentially pulled down, definitely had some technical damage. The 50 crossed below the 100-day moving average, and then the market fell below the 200-day moving average. However, we've got this little line here, this little kind of support level that seems to be holding in. So I'd mentioned that if there was ever a good time to bounce, it would be right there, and it did. But that doesn't mean it's over yet. So again, we've got to get back above the green dash line, which would put us right about the 200-day moving average, and we need to not only get above it, but we need to stay above it in order to feel confident that this market is in full-time recovery. So when we look at the S&P 500 on a weekly basis and compare it against its 40-week moving average, you can see that there's definitely some damage done. The RSI has dropped below the 50 mark, and the index took out the 40-week moving average. So as of right now, the pullback seems to be manageable, so down about a little less than 8.5%. So when we look at the prior couple of pullbacks, it's certainly in line with that. So if we can get a recovery going and get back above that 40-week moving average, I think we can take a deep breath and know that this is indeed just a pull down in the market that ultimately resolved itself in a good buying opportunity. And another chart that I really like to look at is the 5-day moving average relative to the 100-day moving average. And anytime the 5-day moving average is above its 100-day moving average, it's kind of a green light for the market. Everything's trending up and everything's doing well. So we did recently break below the 5-day moving average, did break below the 100-day moving average. And you can also see a technical break in the pattern of the stock as well, the index. So again, in order to feel recovery, we really need to make sure that we reclaim the 100-day moving average. The 5-day moving average reclaims the 100-day moving average, and that we can repair this broken uptrend. So until that happens, we'll be nipping and tucking at certain positions. Just because the index is heading down doesn't mean every position is heading down in the entire system. So it just means we've got to work harder to find those quality names that are trending with higher highs and higher lows. Finally, this chart here is the S&P 500 relative to the unemployment rate. So you can see that the unemployment rate down here has dropped. Is obviously dropped way down after COVID and seems to be climbing up a little bit. However, it's not a sharp increase like in prior situations where the market really had some major rollover. So so we need to also keep our eye on the unemployment, and when we see unemployment really starting to break to the upside, then you could anticipate more turmoil for the market. But if it moderates and continues where it is and stays in a relatively low level, then I think we're going to be okay, and I think this market's going to climb out of this little pullback it's got right now. But this is one of the key indicators that you need to watch in order to determine, will the market continue to climb from here, or will it indeed roll over a little bit harder. So we're going to watch that real closely as well. So in wrapping up, there's been a lot of technical damage that's been done to the market. So it's got to get back above certain levels for us to feel confident that this recovery is here to stay. But so right now, I don't think we're out of the woods, but every good start, comes off a bottom. So we'll be watching it closely. If you have any questions, give me a shout, and I'll see you on the next Markets in 5.